Hello, today is Tuesday and it is the 29th of May 2012. This is my second video for today, so if you're looking for more detailed technical analysis, the first video will have just a little bit more, as well as some predictions that were given regarding the financial system, regarding WebBot's predictions, WebBot's predictions for the summer-fall, and a quick one on December 21st, 2012. The second announcement in this video is I've noticed just in the last couple of hours that ForexPros.com has 15-minute delayed charts for the, XAG/USD, which is what I use for the silver, and the silver futures, and I'm only going to presume everything else that they got. Something that they never had before, because it used to be completely live. NetDania and Free Stock Charts still has live charts. The next thing in this video I'm going to go over is in technical analysis is adjusting to the message of the market and understanding failed moves. And I'll finish this off within hotels, looking at inflation and not being a sucker if you plan on checking into a hotel anytime soon. So let's get started. So the technical analysis message of the market failed moves. In part one of today's video, I put up this 2-hour chart of silver. And I stated that this looked like a possible failed breakdown because the price action managed to make it towards its previous high and above the 18-period average band, as it was trying to find support within this, as it's been doing it essentially over the last couple of days or so. And it's okay normally to have these little quick breakdowns. That's very normal, and very often the big move that comes usually is preceded by a failed breakout or breakdown. However, this was not the failed breakdown, because I'm going to adjust the chart to more recent now, and this is what we have. So the last 2-hour period, the price action lost 2.33%. And yeah, there was this failed breakdown here, but at the same point, there was also this failed breakout that has now, obviously, this thing just collapsed on this particular time frame, making it down to the lower band. So that's the failed breakout right now, and these are the things to look out for. So if you were to be playing it, yeah, a lot of people may be going long here, which means where was your stop loss? Was it here? Was it below this low? If that's the case, you got stopped out. You didn't get as many of these losses if you're playing that sort of game. And when would you realize that this is a possible failed breakout? At minimum, down towards here. Maybe 28.30 at minimum. If not, definitely down to this low here at 28.20. You'd be very concerned that it was going to continue to go lower, and that's the case. There was no Fibonacci support in here, but that's a little touche or whatever, because that's connecting the lows of 26.74, which are still important. But if you look at it within this low, this to me looks exactly like a 61.8% retracement from point A to point B. So that's it for that part of the technical analysis. Now let's go on with hotels. It's been 5 years since I've checked into one. It's been 10 years since I've worked at one. But when I first worked at a hotel 13 years ago, at the hotel I worked at, the rack rate, which is the most expensive rate, or what I call most of the time the sucker's rate, well, it was $98 then. The Canadian government rate, which was the cheapest rate, was $65. The last year that I had worked, in 10 years, the rack rate was actually $122, but still, we'll say $120 for even numbers. And the government rate was $75. I've just checked on the internet the rates today, and it seems the rack rate, or sucker's rate, is $160, which means that over 13 years in time, or actually 12 and a half to be exact, that the price has went up over 60%. If that's not, that's hyperinflation, or maybe borderline hyperinflation to say the least. And now the government rate, they state, was 99, which is just a little bit more than what the rack rate back then used to be. So it's definitely clear prices are exceptionally going higher. So now to not be the sucker, if you notice, okay, if it's after 9 o'clock your local time, or even if it's off-season, Sunday to Thursday, and it's like 1 o'clock in the afternoon or whatever, if you notice the hotel parking lot is not that full, usually half full or less, then you got to barter. If they're selling rooms at 170 for the night, then offer half of that. In that case, it would be 85. And accept an offer to about 30 to 40% off, which would be basically around 100. And that's why you want to go a little bit lower, because you know they're going to go higher. That's the basics of bartering. The hotel cost for a room for the hotel is the maid's cleaning time, cost of washing towels and sheets, etc., as well as the toiletries that are used, and that's basically about it. If you plan on going to a place that has a hotel room in a time frame where it looks extremely logical that it's not going to both be filled, which is like off season, usually, I mean, we're now going in the summer, so if it's a Saturday night sometime in the middle of July, then it might be busy. But if you're talking about the middle of February or almost any Sunday or Monday, then maybe don't even make a reservation and just go to the hotel and then barter again. And that can ensure you that you get a cheaper rate. Because at least when I was working there, it was extremely common to get those discounts. And if the clerks did not give it to them on situations when they were 30-40% vacant, then that was not good for the front office clerk, because they would most likely get in a lot of you-know-what for not giving them the rate. So thank you for tuning in, and have yourself a magnificent day. Bye-bye.